I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Very interesting couple weeks, and it's good that we do these every 2 weeks, not every single day, because it gives me time to see what's going on with the market, our trends changing, and so forth. And really, it's tough to make any meaning out of daily price action, but over weeks, things do matter, and there are subtle changes that do occur. And I remember over the past couple months, really, I've been talking about a potential pullback in the financial markets, probably to play out in October, where the Dow, could fall 10 or 15%. And I still think we could dip, but I'm not so sure now if it will even dip that much. It may just end up being like last year, and like a 5% drop. And so I'm kind of having to revise my outlook a little bit in regards to the potential downsides. And the reason why is that the hurricane, or the two hurricanes that hit the United States, they've caused the Federal Reserve to basically start to downgrade the rate of increases it's going to do of interest rates, or essentially stop them. Now, there's an important story in the Wall Street Journal this weekend where it said that the Fed expected that the U.S. economy could shrink, or it would shave off 1 to 1.5% GDP growth because of the natural disasters, people losing their homes, people fleeing, their lives being disrupted in the third quarter. So it would hurt the growth rate. And then they also said, and when I say they, I'm speaking of people talking to the Wall Street Journal, they get leaks from Federal Reserve officials. They also said that they have no way to predict what the rebound would be, if it would be strong or weak, and so there's a lot of skepticism on any potential benefit to all this, and probably more of a drawback to anything. But the bottom line is, what they were saying is that they really now want to wait till the end of the year before they can get a grip on how bad the impact is really going to be on the economy, and they can't tell right now. So the odds of the Federal Reserve raising rates in December have plummeted. Back in July, they were about 50%. By August, they even started to decline. They were down to 40%. We had a bad jobs number for the month of August. And there's been deflation. If you look at commodity prices, oil, agriculture, and the headline CPI rate has not been able to go above 2%. It's been very sluggish and weak. And this has caused long-term bond yields to fall. On the 10-year bond, for instance, they're down to like 2%, 2.10% when they're about 2.5% at the start of the year. And that makes it very difficult for the Fed to raise rates. So the bottom line is this hurricane has really put the hammer to the idea that the Fed was going to raise rates again this year. And now the Fed fund futures have a 50% chance of the next rate hike being in June of 2018. So we may actually never even see another rate hike in this cycle. Now, the ramifications for this are what I think is the most noteworthy thing. For the short term, it's providing some bullish stimulus to the stock market. It's helping the stock market to go up. People are thinking, I don't have to worry about this, and my stocks are, going to, they're not going to fall because rates aren't going to go up, and that might be true today, but who knows what it'll be like in 6 months. But today is all that matters, and part of the justification for the high valuations in the market is that as long as rates stay low, then I can get my dividend at 2% on this or that stock, and it makes rational sense. But if bond rates, were higher, then it wouldn't make much sense. But this is what the situation is at the moment and what people are focusing on. So that's helped the Dow bounce back off the 50-day moving averages, which was actually the level we were talking about the last time we spoke. And I was saying if we break the 50, we would probably go down to the 22,000 level on the Dow, and we haven't. We bounced off of it. I still think it's possible we can see that 22,000 tested, or even down to 21,000, but it's probably not going to be that big of a deal. And I think this is all bullish for gold, though, and I think that's in the long run the most interesting part of this. I think the trend in gold is really starting to develop in a more bullish manner than it was a few months ago.
We'll have more with Mike Swanson right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Mike Swanson. Mike, do you see any sectors benefiting from all the damage caused by the hurricanes, materials, and so on?
Well, it's funny. The sector that went up the most is the insurance sector that insures all these houses everywhere in Florida. And the funny thing about it is they dipped just a little bit going into the weekend of the hurricane, and then they just bounced really hard when it wasn't as bad as the weathermen were predicting it could be. So there was a bit of a relief rally there. The tricky thing, though, is it just looks to me like that probably move is already done, and I have a tough time picking out any sectors at the moment that look like they're really set up for a sustainable run based on the hurricane damage. I just see lots of stuff that, just to have a short-term gyration up. And that's actually a story about the stock market in general. Yeah, I mean, I know we all look at the Dow and the S&P 500, and everyone is buying these ETFs, and you can see the trend on there. I mean, it's pretty obvious, this 50-day moving average I was speaking about and where the support is. But what isn't really obvious is what's going on inside the market, and that is it's made up of sectors and it's made up of individual stocks. And the strange thing is I really don't see any specific sectors that are really geared for having a breakout and then just going up and leading and breaking away from everything. Instead, what I've been seeing really since probably, let's say, March, is a phenomena where a sector will go up pretty good for a couple of days, and it looks exciting, and then it just kind of returns back to the mean. So if you think back to right after Trump won, bank stocks and infrastructure stocks and transportation stocks, they did lead on that move, and most of them continue to lead up until March. But since then, I haven't really seen any real stock market leadership of a sector that keeps making new highs. Like, for instance, the biotech sector, at the very end of August, it went up sharply for about 3 days when the company, one of the companies got bought, Kite Pharmaceuticals got bought. It helped cause the entire ETFs for the biotech sector, like BBH, to gap up, which spurs more buying in the entire, all the stocks in it. but then that move's kind of fizzled out, or it's just kind of not, the momentum has at least. And that's kind of what I see. I mean, it's what these insurance stocks look like they've done this week. They did go up sharply Monday, but they're not breaking out to new highs. They're just kind of, it looks to me like we're still stuck in this stock market where it's really short-term action that dominates what's going on inside the market, where most individual investors, they just buy the ETFs and invest in them, but it's inside the market. It's really dominated by trading robots, computer programs that are just doing these little moves, and then they get out and go on to something else, and that seems to be what dominates the action. And it's a very difficult game, frankly, to play and try to game and figure out what's going to be the next sector that's just going to go up a couple of days. And that's one reason, I think, over the past few years, there has been an incredible fascination, not with even investing in sectors anymore, but with buying just a handful of stocks that seem to have been going up no matter what. And those stocks, of course, are Facebook, Amazon, Netflix, Google, and Apple, and Microsoft. And the thing about that, though, is that is even sort of slowed down, too. Since July, the momentum in these stocks overall has slowed down. NVIDIA is another one. Now, the Apple did get some excitement this week because it released the iPhone, but then it sold that news the next day, which is this more robot action is what I shake my head and wonder about when I see something like that.
We'll have more with Mike Swanson right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Mike Swanson. Mike, what's your take on the new iPhone? Apparently it uses facial recognition. To me, that just spells Hack City. All somebody needs is a picture of you.
Yeah, I think it's it's creepy. That's what I think it is. Very creepy. It's funny. I'm using an iPhone right now, and I'm not going to buy that. I don't want that. I don't want. They're just going to send that to the NSA, or what if someone gets my phone and does something? I don't know. It's just weird. I don't like it. So it's just too creepy for me. But I think the big thing about phones is I think they're like personal computers. Back in the 1990s, back then, there's a real interesting documentary I watched about the computer company Compaq, which doesn't even exist anymore. But back 25 years ago, there were a handful of these computer companies that were just making fortunes, and the computer was new, and it was a revolution, and the personal computer really was changing people's lives. But back then, people didn't think of it as what it is today, which is basically another appliance. A computer is no different than a television or a refrigerator, a laptop or a desktop. No one cares about it anymore, what company is making it and that much. And it's just, it's not an exciting thing as it was. And now it's the Apple phone, though, that excites people. And there are people this week that were buying the stock because it's Apple, just as people used to trade the Dell stock or the Compaq stock. They trade the Apple stock like that. But in reality, the phone is coming out. I saw the one price is $800. No, that's American dollars, and another price was like $1,200 or something. And I just think it's crazy. I got an Apple phone in my hands, and it's old. It's like one of the first ones because I don't want these gadgets on my phone. I don't want apps and all this. I just want to be able to talk and text, and I don't want all this distraction. that enters your life. I don't want this thing beeping at me and telling me this and that or talking to me. It's just too crazy. I guess I'm just a little old-fashioned that way. But I think I am, even if people might have their new Apple and think I'm being an old fart. I will have to say, though, I want to suggest that the Apple phone is just a phone, and these cell phones are nothing but appliances. And in 10 years, we're going to be thinking about this just as we think about the laptop and desktop computer. There's no real great reason for people to go out and spend $800 or $1,000 for a phone when they can go on eBay and buy a knockoff from China, for $20 or something. Or
and a lot of times, too, you can sign a 2-year contract and get a free phone.
Yeah, exactly. It doesn't make any sense. So, but people like to buy the compact computer, and some people like the Dell. They're just fans, and I think that's what's going on in these Apple phones. They're fans of these phones, but it's just I think it's like a fad thing, and in 10 years, I don't think we'll be talking about it that much anymore. We just won't care.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you. My
guest has been Mike Swanson from wallstreetwindow.com. If you have any questions for the show or the guests we have, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.